Hello and welcome. This is Business Breakfast, broadcasting live from our studio here in Lagos, Nigeria's commercial hub. I am Omobolanle Adeshui. Coming up in a moment, the Nigerian power sector continues to grapple with the age-long problems that have plagued the sector even before the privatization exercise in 2013. Insufficient gas supply, weak transmission infrastructure, absence of cost-reflective tariffs, and poor metering systems have remained largely unresolved. Despite President Muhammadu Buhari's strong criticism against the poor performance of the power sector, the federal government has budgeted about 806.5 billion naira for various power projects in the 2022 budget. Let's take a look at the allocation to the power sector in the 2022 budget and on the show today. This is Business Breakfast. Please stay with us. All right, let's get started with top business stories for today. The Nigeria LNG Limited has announced that its board of directors had approved the supply of 100% of the liquefied petroleum gas, which is a combination of butane and propane, produced by the company to the Nigerian market. The Nlng also said that it would prioritize the domestic market for 100% of its cooking gas production. It also noted that it supplied its first propane cargo into the domestic market 3 months ago. The company also disclosed that it had developed a scheme to sustainably supply propane for usage in cooking gas, blending, as well as in agro-allied, auto gas power, and petrochemical sectors of the Nigerian economy to further deepen gas utilization in the country, which is in line with the federal government's Decade of Gas initiative. According to the statement, the Nlng is currently the highest single supplier of LPG into the domestic market, with an estimated 400,000 metric tons supplied in 2021. And the governor of the Central Bank of Nigeria, CBN, Mr. Godwin Emefiele, has said the recently launched Pan-African Payment and Settlement System, PAPS, will simplify cross-border trade and reduce the heavy dependence on the US dollar, pound, and euro intra-African trade. Emefiele disclosed this during the launch of PAPS. According to the Apex Bank boss, the new payment solution would contribute towards formalizing trade in the continent, adding that it would be beneficial to households, firms, and financial institutions in the continent. He estimated that intra-African trade would increase to 35%, 15% in the next 5 years with infrastructure provided by PAPS. It may interest you to know that the PAPS is a cross-border financial market infrastructure enabling payment transactions across Africa, bridging trade challenges in the continent with over 41 known currencies. It is expected to boost intra-African trade by transforming and facilitating payment, clearing, and settlement for cross-border trade across Africa. PAPS also provides the solution to the disconnected and fragmented nature of payment and settlement systems that had long impeded intra-African trade. And the federal government recorded a shortfall of 2.8 trillion naira in independent revenue from revenue-generating agencies between 2015 and 2020, an analysis of data from the Budget Office has shown. According to the Fiscal Responsibility Act, revenue-generating government agencies must remit 80% of their operating surplus to the Consolidated Revenue Fund account. Some of these revenue-generating agencies are the Central Bank of Nigeria, Nigeria Deposit Insurance Corporation, Securities and Exchange Commission, Nigeria Shippers Council, Nigeria Export Promotion Council, National Health Insurance Scheme, Nigerian Civil Aviation Authority, and the Nigeria Communications Commission. Others are the Nigeria Airspace Management Agency, National Examination Council, Nigeria Television Authority, Nigeria Shippers Council, National Pension Commission, Corporate Affairs Commission, Standard Organization of Nigeria, among others. And the Office of the Auditor General of the Federation has disclosed that 9 ministries, departments, and agencies of the federal government spent about 49.5 billion naira above their approved budgets between 2018 and 2019. The office made the discrepancy known in its 2019 annual report on non-compliance, internal control and weakness issues in MDAs of the federal government of Nigeria for the year ended December 31, 2019, which was submitted to the National Assembly. According to the report, the agencies allegedly violated Section 80, subsection 4 of the Constitution, which states that no money shall be withdrawn from the CRF or any other public fund of the Federation except in a manner prescribed by the National Assembly. Also, it also quoted paragraph 417 of the Financial Regulations, which read in part, quote, "Expenditure shall strictly be classified in accordance with the estimate, and votes must be applied only to the purpose of the money which is provided. Expenditure incorrectly charged to a vote shall be disallowed." End of quote. And that's it for now with the top business stories. Coming up in a moment. The federal government has budgeted about 806.5 billion naira for various power projects in the 2022 budget. We'll focus on the power sector and what to expect in 2022. And that's our talking point when we come back after this break. Please stay with us. Welcome back. Now let's take a look at the Nigerian power sector. The Nigerian power sector continues to grapple with the age-long problems that have plagued the sector, and that's even before the privatization exercise in 2013. Insufficient gas supply, weak transmission infrastructure, absence of cost-reflective tariffs, and poor metering systems have remained largely unresolved. And also, despite strong criticism against President Muhammad Buhari's performance in the power sector, the federal government has budgeted about 806.5 billion naira for various power projects in the 2022 budget. Now, the 806.5 billion naira for is also budgeted, and the intervention is happening at a time when stakeholders have opposed the continuous support for privatized entities by the federal government, and also saying that such move was counterproductive to the ideals of privatization. Now, let's take a look at some of the projects as highlighted in the 2022 budget. These include the 1 billion naira for rural electrification access program in federal universities, 220.5 billion naira for multilateral and bilateral funded projects, that's the Zungeru NEP, the Abuja Power Feeding Scheme, transmission access, among others. Others are the 800 million naira for the distribution expansion program project to utilize the stranded power from the grid. And there's also the 114 billion naira funding, inclusive of multilateral loans, to the Rural Electrification Agency for the completion of renewable energy interventions for the nationwide projects, and also 303 million naira for construction of 215 megawatts LPFO gas power station, Kaduna, and 470 billion naira for Kachambila transmission. Now, the big question is, how much transforming can these funds have on the ailing energy sector in Nigeria? Let's explore this further. I have Sydney Akimoladun, CEO Paysolar, right here with me in the studio. Good morning to you.
Thank you for having me, and good morning, and like to say Happy New Year to our viewers.
Yeah, Happy New Year. It's 2022 and we're looking at the issues again. Now, let's take a closer look at the budgetary allocation to the power sector. That's in the last 5 years. In 2018, the amount budgeted for the power sector was about 40.8 billion naira. In 2019, it was 109.2 billion naira. In 2020, 127 billion naira. In 2021, 198.27 billion naira, while the 2022 budgetary allocation to the power sector is put at 806.5 billion naira. Does this figure come to you as a surprise? Although we've been seeing some discrepancies, we've seen some publications saying that the budget is about 301 billion naira, that's to the power sector. But does it come to you as a surprise?
Obviously, it's not a surprise to me.
I'm looking at the figures now from
Yes.
198 billion naira in 2021 to
and then the very huge
up.
leap. Let's even take the very close figure of about 300 and something
which
billion.
is huge also.
The percentage increase, which is huge. But like I've said over time, what we've seen is government just brandishing figures. Question is, if you look at the whole power sector, in itself, after it was unbundled, the only part that government has is transmission, which is controlled by the Transmission Company of Nigeria. And so this is not a budget that is looking at in itself hugely on generation and distribution, where a huge part of the challenge that we're having as a nation when it comes to our power sector is coming from. So question is, they call this some kind of capital project, but I see it as more of a power sector intervention by government that doesn't have a business in that sector.
Why would you say the government doesn't have a business in power? Is it because it has been privatized?
Because over the years we've seen successive governments feeding money, and it has always gone down the drain. They've been, little or no success. I mean, the Obasanjo regime of government was their administration. Then we had Goodluck Jonathan. He came up with the electricity roadmap thing. Then, of course, now Buhari. In fact, one of the surprise I mentioned in one of that TV station the other time was that you had a government who came on the backbone that, oh, we're not going to pay subsidy on foil. We're not going to. But it was surprising that even this same administration was paying subsidy, sort of, to the distribution companies. And all of this has, not channeled much in terms of the impact. I'm a business owner, and, we run basically on electricity. Okay, you may say, oh, but he's a renewable energy expert, so he should be running on solar and all of that. But again, you don't have solar at night, So small businesses are affected, households are affected, major corporations are leaving the country. Why is this so? Because we still have a major setback when it comes to our power sector. So these figures for me are not tallying, whether it's a huge leap from 198 something billion to about 300 and something billion, it doesn't tally.
So you don't think perhaps the government is looking at pumping in more funds to see that they're able to achieve some of the goals and the projects? Because there are several projects listed out here.
There are ongoing projects and there are new projects. Some of the monies are earmarked to revitalize some of the old ongoing projects, and some are for new. Like you talked about in your intro, you talked about the Kashimbila project, which is an hydro project. We've seen money pumped into that project for years. Even the Mambila project, we've seen money pumped into it for years. What has come out of it? Nothing. What I think the government should be doing is not feeding money in itself into, okay, I give you a scenario. Maybe some certain amount of megawatts of power is generated, and the infrastructure to deliver it to the people, to the end users, is not there, or is dilapidated, poorly maintained, or very old and outdated. What do you have? Power is stuck somewhere. It's not getting to the person. So those are the parts I think this government should be looking at, not necessarily giving us figures that they are trying to.
You think it's just a case of throwing money at the problem?
It's almost the same case again, my dear sister.
Well, some groups have called for the President Muhammad Buhari to scrap the NEC. That's the NERC.
Yes.
They're saying that this sector isn't, is not or has outstayed its use, and that the federal government should look at ways to maybe move the responsibilities to the Federal Competition and Consumer Protection Commission. What's your stance on that?
Yes, they have a case, but I don't think it should be a case of throwing away the baby with the bathwater, okay? What I think is that there's need for NEC to be restructured. There's some kind of hanky-panky we're seeing with NEC and the other, sector players. And that in itself, for me as a player, doesn't really go well. What NEC should be doing is, after government has created the policies, they should come as a regulator and ensure. For example, I give this scenario, not too long, NEC ordered the distribution companies to put a cap on estimated bills that they give to, non-meter customers. Has that happened? So it's like a bulldog that's got back but no teeth to bite.
But when you talk about restructuring is one word that has been bandied around a lot of time, especially in the past years. So when you say restructuring neck, how do you mean? Do you mean unbundling them, just like it was done in the general, what's it called, the power sector? But because over time we've heard of restructuring, but in the end we really do not get that exact result.
This is the simple definition of restructuring. Remove politics from it.
Is that possible?
Wow. If we do that, see, there are stakeholders in the power sector that between you and I, they probably won't allow a lot of seamless flow in terms of growth and progress. You won't believe it that Next said they generated maybe close to about 200 billion as revenue from generator importers in the last year. That is huge. So it means that we still have a generator problem that needs to be solved. So what I'm saying in essence is government needs to be very clear as to what NEC is doing in its responsibility.
So you
That's
don't
exactly
think
the point.
They should be thrown out?
Not exactly. They're still doing a great job at what they're doing.
Let's talk about generation, because you just mentioned generation now, which is one of the problems the power sector is grappling with. Now, recently, the federal government, through the Minister of Power, that's Abubakar Aliyu, said that the federal government plans to increase power generation to 25,000 megawatts in the next few years. And we know that currently we're still battling, dancing around 5,000 megawatts and 6,000. Do you see this as a reality?
It will be a reality only if government is sincere with its policies, not just talk, but walk the talk. How? What are the major means for generating power currently in the country? We got gas supply, we got hydro from some of our dams, then of course more recently we've seen the renewable energy mix, coming into the whole equation. So what government should be telling us is not we want to, what is already on ground. In terms of this budget that has been released and the figures, how much of commitment is going to be made into revitalizing some of the, the Mambila project has been on even before I was born. And the water is gushing away endlessly every day. Just recently they said they were going to revisit it again. And we're hearing not too long that government said also that we're going to generate about 40,000 megawatts from one of the hydropower plants. So what we want to hear is not the figures, but in the doing. If they get it right by restructuring and revitalizing all of these power plants, get the renewable energy mix into it, for example, what they are doing with university systems, having distributed isolated plants to power universities and then the communities, then we can start seeing some impact. But if it's still the same story of we will, and not much is done, then I can tell the minister from here that is just a white elephant
because
project.
5,000 to 25,000,
it's a huge leap. So what you are saying is that it's not just about the generation, because government is not the one even really doing the generation. It's in the hands of private sector players. How does that amount of energy translate to the common man, not you and I in Lagos, but even the rural guys? Because when we talk about all of this, it's a whole mix. If all the energies that is generated in Nigeria is coming to Lagos alone or Abuja, there's still not that economic inclusion where everybody plays their role. So the guy in the village needs to be able to charge his phone. The guy, the small boy in the community or suburb needs to be able to do his assignment. The woman selling sachet water or something needs to be able to refrigerate her drink.
And
all of those things.
I like the fact that you already touched on the fact that we need to cut down on wastage, gas flaring, the wastage of the hydropower plants, and a lot of all the wastages that we experience.
Obviously, yes. There's a whole lot of waste. Like we talked about the Mambila project, the water is going on. Another waste we are seeing is that there are huge number of solar, hybrid power plants that have been, constructed, but this power is not being conveyed,
channeled to the
exactly right. Because during the day when the sun is high in its, at its peak, and the solar energy is being generated, who is using it? And if it's not being used, it's supposed to be fed back to the grid. So that's another thing I think this budget should also focus on. How do we get that transition from translating what is being generated during the day into the grid, so that other people in other areas, maybe the riverine areas where they don't have enough solar during the day, can make use of this power, and then the economy can be better for it.
Let's touch on the National Mass Metering Program, that's the NMMP, shortly. You know, when this program started, the federal government said that they were going to dole out 6 million meters, prepaid meters to consumers. Now it's 15 months into the program. How would you assess the performance?
I'll give them a 3/10.
Wow.
Recently, I had in my own house where I stay a problem with the meter. And we called the guys at the disco, oh, come and look at it. And the next thing they will tell us is that we're going to buy another meter. And we said, no, you just replaced this thing a few months ago. And, you know, what we see is not even, I mean, government in itself says they have local production plants. I mean, I've had interaction with some of them. They're just assembly plants. They can't even meet up. 2 is the issue with substandard equipment and components. Many of these meters are produced by only God knows, and in few weeks from the time they were installed, they are gone. Then we have the issue of, you know, the private sector players in themselves who are, you know, reaping so much from unmetered customers. Not it's like an apathy, not wanting to even give meters, you know. So all of these things play a huge role. So for me, what is government's role? Why are they giving out meters? Is it for the Christmas kind of thing? It's not their job. So government should focus on what they should do, but prevail on the authorities and the regulators or those people in that sector to ensure that everybody is metered. Otherwise, we will go back to the same. Look, whether you like it or not, those who are not metered are cutting the system. They are circuiting the system, and that itself is loss of revenue.
But there have also been talks that some consumers do not want to be metered, that some of them would say, well, I'm not usually in the house to use this power, and so instead of paying for something that I'm not using, why not just wait for the estimated billing when in the end I can still cut corners to pay lesser?
Well, I don't think the consumer has that right, you know, to determine or dictate.
That's what some stakeholders in the past sector
we've seen that happen. I mean, we've seen cases of funny it is, but we've seen cases of even people fight, you know, the engineers from these sectors and all of that, even push them off the ladder and the rest. So it's not theirs. There is a map out plan. Let it be followed and let it be efficient and effective. The delay is, you know, just too long. For now, we should be talking about metering more than 90% of the Nigerian citizenry. So it's not these figures that we are brandishing all over the place. The authorities should do their job. So it's not the call of the consumers to dictate whether they should be metered or not.
8 years down the line, the government still faces the daunting task of whether or not it should revoke the licenses of discos, gencos as punitive measures for underachieving its mandate. What's your take on this?
That in itself has a lot of structural and legal implications. So government can't wake up tomorrow morning and say they will do that, because the clauses that are in the contract signed with government will not allow government to just do that. It will mean then litigations will come up, they will go to court, and who suffers when 2 elephants fight?
The grass.
So it's simple as that. So government will probably do that to maybe like a wake-up call to the to the players, but it's not something that will happen overnight.
So you're saying they would just let matters lie?
See, seriously speaking, who are the people who are the owners of this what's it called, the discos and the gencos? There are some people in government. So it would take a real fight for the government to say, we're going to revoke your license. If they take them to court and government, why did recently government...
okay, maybe we shouldn't go there because we're really pressed for time.
Okay.
But thank you so much, Sidney Akimoladu, CEO Paysolar. Thank you so much for
thanks
the
for having me.
contribution. All right, so we'll take a short break. We'll be back to continue the conversation on Business Breakfast. Please stay with us. Many thanks for staying with us. Now let's take a look at the stock market performance. Equities market closed on a negative note as Nigeria Exchange All-Share Index depreciated by 0.01% to close at 44,604.74 basis points as against plus 1.71% appreciation recorded on Wednesday. Market breadth closed positive as Transcorp led 14 gainers against 13 losers, led by NEM Insurance PLC at the end of Thursday's session. Meanwhile, market turnover closed positive as volume up by 20.81% as against 9.58% negative territory recorded previously. Transcorp, Jay's Bank and Mutual Benefit Assurance PLC were the most active to boost market turnover, while Seplat and MTN Network topped market value list. And to analyze all of this, I have with me in the studio Ambrose Omodion, Chief Research Officer at Invest Data Consulting. Good morning to you.
Good morning. Thanks for having me.
Now, looking at these figures, investors lost over 2 billion naira at the end of activities in the market on Thursday. What are some of the factors driving this sentiment?
Yeah, actually, it's expected that after the market have rallied for almost 8 straight days, seeing a little pullback, it's part of the market. Anywhere in the world, you don't see a market that will keep on going on. Up, they try to pull back to create opportunity for others to enter at a lower price. And what we saw yesterday was just a profit-taking activities, which I said on this program is part and parcel of the world of the market. But don't forget that the market, in these last 4 trading days, has been up for two sessions and down for 2 sessions, which have said earlier that we expect a mixed sentiment or a mixed market because the first trading week of the year was positive all through. This second week, people are about to take profit. If I made about 30%, 20% in less than 10 days, we are about to take profit. That means what we're seeing is not that fundamental that brought the market to this level or the drivers of the market to this level has changed. No, it's because people are taking profit as part of the market. That means as an investor, when you see this pullback, look at stock that you are not in that has good fundamental. You have to plug in with the opportunity of start pulling because the opportunity is going to continue in just after some days is very high because we're expecting numbers I've said earlier. All those unaudited accounts for for the fourth quarter will start hitting the market from next week to change the face of the market, and also we're expecting the inflation figure or call it inflation figure or call it the consumer price index to hit the market any moment from either today or next week Monday. If it comes, also going to guide. Also don't forget that yesterday, this is the first time after like more than 3 months that in the option or what they call a treasury bill option, there was a little increase in the rate from about 5% to about 5.5%. That means almost 50 points that was added to it. That is a sign that those fixed income instruments are gradually catching up. That also attracts funds from other equity market. It depends the outcome of the MPC meeting that will come on next week. That will also give a clear direction where they are going. But for me, looking at what is happening in the market and also the economy, I think it will be too quick for the monetary policy or CBN to hike rate at this point. But if they do that, it will be kind of a negative sentiment for the equity market if they hike rate now. But if they keep the rate flat, that will be what will attract investors to still look the way of equity market. But I believe that because the economy is still recovering, going to rate adjustment in the next implementation, it should be early. But this is the first one in the new year. I think they should give time again to see how the economy will kind of recover, bounce back, or show some of resilience before they can do adjustment. But I know that the World Bank is already calling that you should develop your naira, you should increase your those ones. I said our environment is different from their own environment, and the managers of
you don't subscribe to that.
No. The manager of our economy knows that their economy is different from our own. For that, they know that they are trying to almost the last 8 MPC meeting, no adjustment in rate because they see that the economy is on recovery. If you look at what the CBN posted yesterday about what we call a purchasing managers index, you can see that it's still below 50 points. I mean that the economy is still in contraction. It has not come up. For me, it is too early for them to rush into increasing rate or anything. But I believe that the market is still very heady. If you look at the chart...
what's your prediction or analysis of investors' appetite, considering the fact that the banking sector moved up 0.07%?
The banking sector, even I've said it severally, even on different media, that this banking sector in Nigeria is the most active sector and most consistent in dividend payment in Nigeria. And also, because of the volume they have, traders, both institutional investor, retail investor, they play easily with those stocks because anytime you want to sell this stock, you're always a buyer. For that, so I see most people want to play banking sector for for trading activities because that is where you can go in and come out in good volume. But that is why you see anywhere in the world, because also the banking sector is the engine room of economy, so that activities in the banking sector also reflect what is happening in the economy. Now that we are seeing that we are recovering, you can see that the banking numbers also are looking good. With what we just saw yesterday from the the treasury bill option, says that if the rate is slightly going up, it's going to impact the banking sector positively because they play more in that space. The banking must play more in that space. For me, it's good for the banking sector, and we're expecting that most of them are ready to pay good dividend at the end of this current financial that ended in 2021 December. That means going forward between now and end of March, we'll see more of these banking results. That will also ginger or trigger some sentiment for the sector because when the numbers are coming and they are paying good dividend and we're seeing strong numbers emanating from those the banks, that will encourage more activities in that sector.
So what would you say is the cash cow in the banking sector looking at their earnings?
No, for me, because they perform, let me say, well in the last third quarter result, which was about 9 months, we have seen their performance. They're only waiting for the last quarter, which is just 3 months for December. And also knowing that this is the festive period for that period, we see a lot of activities in the economy. That should also kind of add to the bottom line of the bank because of the festive period of last year. For me, I see the bank result was to maintain that tempo. Those that have grown their top line double digits, and that also do that. Those that also perform flat will also do that. But the strength for them to pay good dividend on the strength of their equity numbers are there. That means as an investor, you look at what they did in 2020 and what they're going to do in 2021. Because if most of those banking sectors have surpassed their 2020 full year with their third quarter, it gives you an insight that these banks are ready to pay good dividend. But also, if there's any policy change between now and they announce the result from CBN, they might say, okay, let's keep more of our earnings as retained earnings and pay less. But if there's no change, I believe that if you look at the payout ratio of those banks before now, I see that most of them will pay good dividends.
So let's look at the direction of the banking stocks, especially in the coming weeks.
No, actually, like the more we go into the year, the earnings season come closer. That means a lot of investors, now that most of the fund managers or have not resumed in the market, only few of them are trading. By next week, we expect them to be in the market or before the end of January to be in the market fully. And they know the volume that they play in the market. And it's only banking sector they can get such volume every day, any day they want to make that volume. For that sector is always active. For that, I believe that, I don't want to mention the name of the bank investors should look at, but I believe that the banking sector is a good one. They should target and take.
So how can investors position themselves for this?
You look at the numbers. Numbers don't lie. We have seen their third quarters result for all. Then sit down and say, oh, you compare the third quarter result with what they did in the previous year, full year 2020 and the third quarter. If the company have surpassed the full year 2020 numbers at third quarter, as an investor, you should ring your mind. Oh, that means if as a third quarter they have outperformed their 2020 performance and they pay dividend of so kobo, that they pay 30 kobo dividend, and as a third quarter that means you are sure that they are likely to grow their dividend from 30 kobo to 35 kobo or 40 kobo. That should guide you as an investor.
All right, let's look at the charter. Let's get an analysis of the chart.
That is why okay, if you look at, as we just said, like market yesterday, we saw that the market and within the week I've seen 2 days up and 2 days flat, pullback and all that. But the good thing is that market has broken out another major resistance level about 44,338. Now market has gone as high as 44,604. It tells you that market is on the uptrend. And if you look at this rectangle here, you can see that there's what we call resistance and support level here. Market are playing in between this rectangle. You see where it touched here, it came down, it touched here before it touched here, but there's a breakout already. This breakout confirmed that the market is going somewhere. You as an investor, seeing this breakout, it gives you confidence. But you take that, look at the breakout and see the volume that supported the breakout. You now come down here and check your volumes and see that this volume that supported the breakout was higher than the previous one. That is that the volume is gradually coming back to the market, which will believe that by next week, once we'll see more of these investors or fund managers returning back to the market. We might see also a better volume that also guide us. But now that the market have broken out the resistance level with a strong volume and still going up, I believe that the market is staying on that. Because yesterday, so that the market still have a positive sentiment. That tells you that investors are still hopeful about the market. That means for me, I would advise that any position you are as an investor, looking at this chart, just hold your position and know and watch the market, because market is always there to create wealth for designing investor. That is the market.
So apparently we're still on a positive trail.
No, very, and very strong.
All right, thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Thank you so much for your time on the show.
Thanks for having me today.
All right, we'll take a break, and then when we come back, we will be looking at the commodity market. Please stay with us. Welcome back. Now let's take you to the commodity market, where despite multiple signals from the U.S. oil industry that it will continue treating the oil price recovery cautiously, signs are emerging that production growth is accelerating in some key locations, and the Permian, Reuters reported this week, citing frac spread data from Tudor Pickering, Holt & Co., that the rate of oil well completions in the Permian had risen by 5% in December. Frac spreads, or the pumping of water and chemicals into the wells to release the oil, the actual hydraulic fracturing, are one of the last stages in a well completion, according to the report. What this likely means is that consistently higher oil prices have finally proven too alluring to resist. Financial discipline and shareholder returns are all respectable priorities, but with global demand for oil seem strong despite the new COVID-19 cases and with supply disruptions elsewhere. U.S. oil is gaining further prominence, and so is Permian oil. And also, gold prices were trading higher on Friday, poised for a strong weekly gain in more than 2 months. The higher inflation and pressure on bond yields may keep gold prices up for the medium term. Investors await economic data that could provide clarity on U.S. Federal Reserve's tapering policy, while a weaker dollar and Treasury yield supports bullion. Gold futures on multi-commodity exchange jumped 0.29% or 138 rupees at 47,874 rupees per 10 grams. Silver futures were marginally up by 0.05% or 30 rupees at 61,950 rupees per kg. And U.S. inflation data released this week was mixed, while Fed officials are supporting faster rate hikes. Support from various concerns, geopolitical issues, and concerns about the Chinese economy is countered by persistent strength in equities, ETF outflows, and higher yields, according to Ravindra Rao, CMP, EPAT, VP, Head Commodity Research at Kodak Securities. And with that, it's a wrap on today's episode of Business Breakfast. I am Omobolanle Adeshui, and from all of us here, it's bye for now.
slap you.
Ah, okay, now slash me.
Who? Making noise in the government house. Who are they?
They want to see me. Can't somebody handle their case? It's me they don't want to see. Okay, let them come.
Follow. Like mother, like daughter.
I beg you. This one will concern me now. Now this matter will carry come here. I beg, I don't want.
To talk. We won't take this.
Excuse me. Yes. What is all this for?
We came to report your driver that impregnated my daughter.
No, Daddy, no.
I don't understand.
Why are you doing like last man?
Excuse me.
You go
Will you shut up? You are in the governor's office and you have a very peaceful. So what is the problem?
Sir, we came to report your driver that impregnated my daughter.
Daddy, no.
Wait. My driver impregnated her?
No.
Me?
You not fit.
I beg your pardon.
No.
Sir,
Then your boy.
sir, with the way situation have now, we pardon your baby. Because the thing there, this girl said your driver, but the way she's stretching her, it's like you.
It's like me?
Yes.
Excuse me. Have you met me before? Oh my God.
Sir,
What is this?
she's trying to show you what you use. Sir, we can
Wait, she said where and when?
That's right now. That's right.
Sir,
Ah.
you two are remembering.
Ahead.
Small.
That's so now.
I mean, she's the one. See, what you drop into a fertile soil has germinated. It has grown.
The secretary here about this?
Oh,
The first lady.
I like. Oh, he has accepted us. Our in-law near your husband.
Wait, are you saying that I am the one responsible for this pregnancy?
My governor, let me tell you something. On Agami, he's written capital letter G, meaning governor. You're not good. That's it. No, it's your property.
Oh shit.
Don't be rubbish that you have been doing up the house.
Leave her alone. She took after me. After she well.
Please, madam, you see, let's just come to an agreement.
Negotiation.
You see,
They are together.
I saw you with another man that
Like, no, this girl cannot even shit in Waye.
No.
Let alone cheat on you. I can't cheat. This girl cannot cheat.
So you decided to make me the father of the baby again?
Sir.
Me and you decided? When? Because I was drunk that night? I was celebrating the victory of our party.
We voted for you.
Anyway,
We voted for you.
Yes, sir.
if she gives birth to a girl, no problem. You know in this state we don't allow abortion.
I know.
If she gives birth to a girl, I will give you 30 million.
Thank you.
Sir, my governor.
Cool down, cool down.
I will do that.
Cool down, please.
I will do that. Don't touch me, I'm cooling down.
If she gives birth to, what did I say before? Boy, I will give you another 30 million. If she gives birth to a girl,
My good better head.
and again, sit down, sit down.
Governor, I'm okay.
I say sit down.
Governor, I'm okay.
I say sit down.
Governor, I'm okay.
Sit down.
Let them call the AC.
If she gives birth to twins, I'll give each of you 50-50 million. What is all this?
Governor, you have spoiled our life. I have not counted 50,000 before. I don't spend only 50 million.
Let's sit
20
down.
million.
Sit down. Sit down. Sit down.
Daddy, stop it. You're embarrassing me.
You are embarrassing me.
Embarrassing us. Embarrassing me and my baby. Oh. Daddy, we've gone to London before.
Governor, our life has spoiled. Sorry, our life has better. And if she loses the pregnancy,
You go put her. Excellency, it might be killed. I think you are the last.
my baby,
But it's not you.
if you touch her, I kill you. Don't want to. We have to rent me back to carry you. The friends. Open the door. I come from.